Qualcomm just reported their earnings and the stock is down by about 5%. It's currently trading at about $167. So is this a buying opportunity? That's what I'm going to cover in this video. A couple of years ago, I made a video on Qualcomm in which I provided a lot of details. So to keep this video short, I'll not be repeating most of the details I covered in that video. Let's first look at how they did in the most recent quarter. As you can see on the screen, the revenue was a beat and EPS was even a bigger beat. So they did well in the most recent quarter earnings. Let's look at the guidance. They only gave guidance for the next quarter. They did not give for the full financial year. So for the next quarter, they're saying they can make anywhere between 10.3 billion to 11.2 billion dollars of revenue, and the EPS target was 2.7 to 2.9 dollars. So that's also in line with the analyst expectations. But the reason why the stock is down is because they are expecting that their licensing revenue would be 2% below the expectations. Qualcomm, as I mentioned in my previous video, has broadly two revenue segments: Qualcomm CDMA Technologies QCT and Qualcomm Licensing Technologies QLT. So the licensing part is a higher margin revenue. So that revenue is reducing and it's being compensated by the revenue in the Qualcomm CDMA Technologies revenue, which is low margin, and that's why the stock has dropped. Let's look a bit more deep into the most recent quarter earnings. As you can see on the screen, the total revenue is $11.669 billion. And QCT, the Qualcomm CDMA Technologies, contributed to $10.1 billion. And the rest of the $1.5 billion came from the QTL. That's the licensing business. With respect to segments, handset revenue increased 13% year over year to $7.57 billion. The automotive segment is up 61% year over year, but the revenue is less than $1 billion, so it's easy to grow that fast. And the same story in the IoT, Internet of Things, the revenue rose by 36% to $1.55 billion. So they're doing well in the IoT as well. As we all know, Apple contributes to about 20% of Qualcomm's revenue, and Apple is going to walk away from Qualcomm by end of 2026. So Qualcomm is going to lose a big chunk of their revenue in the handsets. So they have to make it up with the automotive as well as Internet of Things, and that's what they're trying to do. But it's low margin revenue, the automotive and Internet of Things. So we have to see how that's going to play out. I'll cover that in the valuation. Before I move on to the valuation, I want to clarify that this is not financial advice. I'm not qualified to give financial advice. I'm simply recording my thoughts about Qualcomm. So I'm going to show two cases, one with reasonable assumptions and the other one with great execution. In the reasonable assumptions case, for 2024, they made about $38.96 billion of revenue, and I'm estimating 7.5% revenue growth year over year for the next 5 years to make $56 billion of revenue for 2029 for Qualcomm. From $40 billion to $56 billion. That's about $16 billion gain in 5 years. Remember that they're going to lose about $6 to $8 billion of revenue from Apple, and they have to make it up with the IoT and automotive, right? So $56 billion I think is reasonable. Based on their current gross margins, I can assume a net profit margin of 20%, which means they'll make close to $11 billion of net income by 2029. I'm estimating a multiple of 25 because this is a hardware company and also cyclical. So 25 multiple I think is even optimistic. So with that, this company would be worth about $280 billion by 2029. Since they make profit, they pay a dividend, and the rest of the money they buy back shares. So I'm assuming 1% buyback. Don't think 1% buyback is less. This is a $200 billion worth of company, right? So with that, they will have 1.06 billion outstanding shares by 2029. That converts to a stock price of $265. Currently, they're at 167, right? So that's about 58% gain in 5 years. And that's performance on par with the index. In the great execution case, I put 9% revenue growth year over year for the next 5 years to make about $60 billion. And I updated the multiple from 25 to 30. So with that, the stock price would be $341. Currently, they're at 167. That converts to 100% gain in great execution case. For my personal journey, I look at the reasonable assumptions case, in which I'm estimating $265 stock price. And I need at least a double in the reasonable assumptions case. And for that, the stock has to fall to $132 or low. So I would be a buyer of Qualcomm if it gets to $140 range. Otherwise, I'm going to stay away from Qualcomm. Let me know your thoughts in the comments. Thanks so much for watching.